Good morning, SMF. How are you? Time is 7:51 a.m. Today's date 1/22/2011. And what are we gathered here today to look at is we're going to be really looking at the bear market ETF. And MMTs, you can see the kinds of gains that happened this last week during a great earnings week. And the key for all new MMTs is to understand the differences between the two markets. One is a bear market and one is a bull market. And has the bull market finally starting to show its reversal tops and things like that. What goes along with this bear ETF happens to be things like the VIX, the fear indicator, market volatility index CBO. What does its primary function is? That when you're way down here, there's no fear and everyone's complacent. This is when they start to slide the bids like they did in the earnings season last week. We had record earnings out of Google. We had record earnings out of Apple. We had IBM come in strong. We had other various different earnings that did okay, and even some in the financials. Not all was bad. However, the biggest haircut that we seen was the NASDAQ 100. And once it started its market top, and we'll be doing a monthly and a weekly chart on the NASDAQ comp and that NASDAQ 100, NDX 100, right there down 17.76 on Friday, and the NASDAQ comp down 14.75 handles. Okay. Now, we were in the first major earnings week. We had two different kinds of scenarios mapped out. And for several weeks, as we were going to approach this new year, January 2011, we clearly stated that we had already entered an extreme overbought areas within the market structure. And whatever day that reversal would come is that we would start analyzing it, MMTs, and that's what we're gathered here today to do. The video, we will go through all of that. The most important thing right now is to understand how last week was treated, but let us not forget that the S&P 500 earnings are coming in this following week and the week after. The bulk of those earnings will have already reported. So it's very easy that tech was so overbought that was the best part of the 2010 trade. And in some cases, they're falling and selling off from their overbought levels during these good reporting sessions because that's what some of the evidence shows. And basically, as a market maker, we just know that there are markets below the market in the equity side and the option call and put side as well. So therefore, now that we have started a reversal, we're going to start looking at how overbought the bull is. There's an S&P bull and a short, and we're looking for the higher volume categories. There's a financial bear. That's a new one that they just came out with. Here's a new one right here. It's a bear 3X. It's a new one. So we do have a couple of new issues that have come to our surface as far as the bear market ETFs. Now, on the other hand, what we're going to be doing is, I'll pull this over for you, is the bull ETF is right here. So we have two sets, and we are going to do some matchups in here, and we're going to take a look at the overbought and the oversold. We're also going to be very mindful, MMTs, exactly what this ratio common denominator of imbalanced trade is within the actual marketplaces right now. So that will be our next step in our next agenda. As we move forward through the next couple of weeks of earnings, we're going to be looking at how they treat that. We'll be looking at this SH here. It's a short S&P 500. So there are different instruments that move differently in price. The higher volume one, you have an ultra trust short S&P 500, and at times they get so oversold that they have their bounces for a short time before they can roll back over, and then the bull comes down off of the top and then it sets itself to go back up. So we need to monitor carefully where the destiny will be. And there are several various instruments that can be used in bear and bull ETF trades. And it's all about the market direction. And it's all about the SMF Market Maker platform. And that platform will do all of the equations for us, because it's going to tell us if the bull, here's the bull, if the bull is strong, or it's going to tell us if the bear is strong. As in MMT, which is a market maker, we don't care. So what? We only care which way the money is going to be printing, so that we can be looking at where to buy that short. And then not only that, if a bear move is going to go higher, you make money that way. And then you can short the bull outright, and you can also buy a put option if it has options on it, so you can short it and go long the bear and short the bull. So if the bear goes up, the bull goes down, and you get paid 2 debits. So that's part of understanding the key component of the various different cycles we are in. We've only had a January earnings kickoff for 2011 right along with an options expiration, which was very, 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 very treacherous on the bull. Boy, the bull got really hurt. In our next video, MMTs, together, we are going to take a look at some of the January expirations, and we will have clear evidence as to where things are happening. Okay? So that's what we'll do in our next tape. Once again, the Dow component and the NASDAQ tech, heavy tech related component with Apple and Google and the leaders in there, they're all extremely high. And some of the old Dow 30 are doing okay. And we have Dow 30 stocks reporting earnings season next week. So on Monday, which will be the 24th of 2011, you'll see some of the Dow components. You'll start seeing a lot of the S&P 500 clocking in their numbers in the different sectors and industries, and then the public reaction. Where is the tape moving from? Is it going to move back in to some of the other type of stocks within the indices and taking some profits in some of the heavier related tech? So we look at the bear and the bull on these right here. Apple's a big culprit. It's about 21% of that NASDAQ 100 or so, really. And, you know, the best time to have a bear is to find out which bear is related to this. Because when Apple is acting poorly, it takes it down, just like it took down the TQQQ, which is the bull, and the SQQQ, and the bear was a good trade off the bottoms. So this is the introductory to the Saturday training session, and we'll go off video now, and we'll start doing our work.